We're going to be talking about technical indicators today, and we're going to be looking at some more good practices. Okay. Again, in the course of this, or in the journey through this course, what I have done is I have filtered out unnecessary jargons. Okay. I filtered out things that you don't need, you will not remember, it doesn't make any sense, it doesn't make you a better trader, it doesn't make you a worse trader, it is just junks that probably would make you miss the important information. So I filtered that out. That is what the people in the city will not do. They would give you volume of information to make you feel like the £3,000 or the £5,000 you've paid for the course is justified. But in actual sense, it doesn't mean anything. Okay? It's like you go do a driving lesson. And then your tutor or whoever is taking you on the driving test decides to give you 10 textbooks to read about driving. Because his services to you cost you £10,000. So he decides to give you 10,000 books to read. Yeah? On the books, it may look like, well, yeah, it's giving you a lot of information, but would you need it? That's the question. Would you need it? Because think about it. When you start driving, so many of the things, you would become your own kind of driver anyways. Isn't that what happens? How many of you do stuff and you remember, oh yeah, it was my driving instructor that taught me this? No. You just do all of those things to pass the test. Once you pass the test, you drive how you want to drive anyways. I mean, so many of you, or so many of us still try to, drive safe, don't kill anybody. But hey, you become your own driver. It's the same thing in trading. You become your own trader, okay? Your temperament, your personality has a way of showing in how you trade, okay? And I always tell people, build your trading strategy around that. Don't try to be like anybody else, okay? Be inspired by people, but don't be them because the world is just going to be boring, okay? They've just cloned themselves. Get inspired by people to be the best version of yourself. Then you bring beauty to this world, because then there is an Angela and there is a Victor and there is an Ivana, and everybody is not just Victor. Does that make sense? I have a quick question that's unrelated. I've tried to set alerts on the app many times, but the app doesn't ever alert me when the price point is reached. How do I change it so I get a push notification? Okay, so you need to set your notification. Do you set the alerts on your phone? Do you set the alerts on your phone? Guys, just give me 1 second. I don't know if any of you have ever tried to set an alert. So let's just solve Angela's let's answer our question quickly. Again, she's my sister, so yeah, just gonna answer our question. Just joking, guys. Yeah. So alert. Give me 1 moment. So let me try to set an alert. I want to see why. So yeah, I'm going to keep talking as I'm doing it. And if anybody has any question as well, please do ask your questions. Again, like I said to you, I want to see you asking questions. If you ask me questions, it means you've tried to do something and you encountered a problem. If you don't ask me questions, it means you're not doing anything, because, I mean, you have to have questions. You haven't done this before, or you haven't done this as intense as you've been doing it now, or as you should have been doing it. So you definitely should have questions. Okay, so let me try to set an alert for Bitcoin. So I'm going to say, when price crosses below 44, allow me to sell. So set an alert, sell lower than 44. Yep. 44, sell Litecoin. Yeah, I saw that question as well. I'm going to answer it because, yeah, it's not fully answered, or it wasn't answered. It was answered, but yeah, I'll give you my own version of my own answer. Okay, so if you set an alert to do, that's you. Can I ask Angela, does your IG give you push notifications at all? Does it give you push notifications at all regarding anything? No, it doesn't. Okay, so you need to go to your settings. Okay, not the app now. Go to your settings. If you're using an iPhone, yeah, should be like so. Go to your settings. Yeah, so if you go to your settings and you go to notification there, and then you want to scroll down to IG there, and you want to switch on the notifications. Yeah, if you do that, you will get notifications. Okay, if you just send you notifications like your WhatsApp, the notifications are on. So it's weird why it doesn't show you, because I get notifications. Let me show you what it looks like. Oh yeah, I don't have anyone recently, but yeah, I get notifications all the time. You know what? Let me set one now that would probably trigger before the end of this class, and you can see it. So if I go on the alerts, and I'm gonna set one now. 45, 50. Okay, so I've set an alert now, and as soon as the alert, as soon as the alert triggers, as soon as it triggers, it should notify you. I don't know why that is. Yeah, so I just got notification now. Did you hear it? And that's it there. Yeah, that's it there. Lead coin sell. It's telling me the lead coin has gone below 45.50 sell, and if I should click on it now, it should take me there. Yeah, and it showed the triggered alert. Yeah, and I can delete it, or I can edit it, or I can say another one. So I don't know why it's not showing. So yeah, Angela, check your phone and let me know how it goes. Yeah, so guys, we're going to be looking at technical indicators this morning. I also have a question. Yeah, let's answer your questions. Should I be looking for trends in each time frame, as trend look different depending on where I've put the time frame, on 4 hours or weekly? Thank you so much, Mohammed. That is a very brilliant question, and it shows me that you've been doing a lot. So yes, you're supposed to find trends on different time frame. The reason is because, say it this way, when you put a trend on a big time frame, once you change your charts to smaller time frame, that trend will always be there. Okay, it's just that it's going to be expanded. So if you find a trend on weekly, okay, say the trend looks like this on weekly, okay, when you change it to daily, what it means is every single candle on your weekly trend will then become 4 candles on the daily. So you have more candles. It just shows you more information. Okay, you see more when you're looking at smaller time frames. So the lines that you've put there for your trend on a weekly will still be there on the daily. But what would happen is when you change it to 4 hours and hourly, because there are more candles, you then see that the line is really wide. Okay, it's really wide now. So think about it this way. If you're looking at the trend on a weekly, okay, you're looking at the trend on a weekly, and the trend is saying buy, okay, price is at a support, okay, or price is near a support, like this close to hitting a support, okay. It's journeyed so far from a resistance, and then it's this close to hitting a support on a weekly. Now, the little space you're looking at on a weekly, when you change your chart to hourly or 15 minutes, it's going to be a long journey still. Okay? So if you were to buy using the weekly thinking, well, it's close to the resistance, so it's close to the support, so I'm just going to buy here to trade the journey back up. You may lose a lot of money in that space because price still hasn't, if price turns around straight from there, starts going up, good for you. If it doesn't, what will happen? you would expose yourself to a big risk. So what if price even gets to the support and breaks it and keeps going? Even worse, right? So see that little space left. When you start trading, you will understand that little time frame or little space you see on a weekly means a lot when you're considering it on a hourly or 15 minutes or 4 hours. Okay? So if you were to go deeper and change your time frame, you probably see a trend, okay, heading towards the support that is still yet to be complete. Okay, you'd see a trend that is yet to be complete. So what is wise? I would rather trade that trend that is yet to be complete, but I will be trading the buys in that trend because the trade is, the journey is near to the support anyway. So the buyers will soon kick in anytime from then. So I wouldn't trade the sell more confidently. I would trade the buy more confidently. I'll show you what that means in the chart. So I would trade the buy more confidently because I know it will kick in anytime from now. So should I trade it buy and it kicks in, it's good for me. I go in at the right time. But imagine I was trading the sell and the buy kicks in. Yeah. I'll trade the sell. I'll trade it cautiously. I'll trade the buys and I'll trade it confidently. Okay. But yeah, so you should find trends on different time frames. Okay. If the trend is saying something on a big time frame, if you downscale to smaller time frame, you will still see good trends that you can still trade and make money before the main trend line kicks in or the bigger time frame. When I access IG and explore the indicators, there are so many options I do not understand. Oscillators, it's okay. That's what we're going to start going through now. We're going to start talking about indicators. Okay. Obviously, the reason why I didn't start with indicators is it doesn't make sense for me to tell you how to drift when you're still learning how to drive. Okay, it doesn't make sense. So you need to learn how to change gears first. Okay, if you're driving a manual car, how to steer your car to the right place, how to do safe maneuvering, how to park the car safely, how to move off safely. I have to teach you those things before I then teach you how to drift at 120 miles an hour. Okay, I can't just start from there. It means I want to kill you. Okay, I don't want to kill you guys. Yeah, I want you guys to do well. So, like I said, in the course of this trading, in the journey of this trading course, I have tried to make this trading look as informal and as simple as possible. Okay, I didn't try to make it look hard to you because even though the financial market is a tough place, as you can imagine. Okay, this is what the likes of Facebook and Google and stuff. You see, when they do so much hard work to make money from whatever they sell directly, okay? Think about it this way. They didn't take that money and come over to the financial market. Okay, so they do their retail trades to generate capital for this market. It shows how important this market is. This is where everything happens. So as you can imagine, it's a tough place to be. Okay, but it's not rocket science. It's not rocket science. And because of that, I've made this course so informal, so I've simplified it. Okay, that's the word to use. I've simplified it. I've filtered out the noise, the boring jargons that don't make any sense, and I've just told you exactly what matters. Okay, and I've tried to teach it in a way that creates like a story. Okay, I didn't follow some table of content. There's no need for that. Okay, this is 2019. We're not going to be following the same education system we're following in school. We keep the school in school. This is just, you're learning a craft. And I just want to be sure that you understand it and you can take off from here. So we're going to be looking at indicators. I'm going to share my screen now. Please interrupt me at any point if you have a question. Please ask questions, ask questions, ask questions. Do we all understand how to trade spread bet? Do we all understand how to place trades on DFBs? Okay, spot positions. We know how to buy spot positions. You don't want to buy futures. I mean, when you figure out and you get a hang of trading, then you can trade futures if you like. It's up to you. I'm just saying right now, spot market is what you want to be trading. A spot market is a market that you can open straight away and you can close straight away. So do you all understand how to trade the spot markets, DFBs, I think some of you guys who are trading on a different time zone, say in Europe, your market looks a little bit different, which is understandable. But those of you who are in the UK, I expect your screen to look like mine. Okay, if I see anything funny, that means you've done something dodgy. Not dodgy like that, but you know, you've done something. I'm going to try to answer Roy's question. I missed that lesson. I will catch up. Yeah, that's fine, Angela. Yeah, so Roy was asking a question this morning about how our money works on the IG account. So I'm going to share my screen now, and then I will show you quickly. It's very, very simple. Okay, so someone from the team answered you this morning, and the answer was fine. I just figured I would say one more. Okay, so look up here. Can everyone see my screen? Can everyone just confirm that they can see my screen, please? Yes, can see. Okay, good. Okay, so if you look up here, yeah, look at my mouse up here. So funds, basically, this is all the money that you have. Okay, this is your capital. Yeah, funds. This is your base capital. This is all the money that you have. Yeah, is your funds. The profit and loss is every trade that you've opened. Yeah, this is how much profit you're in or how much loss you're in. So for example, if you have two trades open and one of them is in £100 profit and one of them is in £50 loss, okay? On here, you will just see £50, okay? Because you're making £100, you're losing £50, okay? So you're still in £50 profit, okay? So profit and loss, that's how it works, okay? It shows you exactly how much loss you're in or how much profit you're in from all the trades that you have open presently. That is what this means, okay? And so if I should open my positions now, yeah, so you can see my positions, yeah? Let me open everything up so that you see, okay? So I've got two 0.5 positions on this trade, okay? All of them making one, isn't it? 0.5, 0.1, they make it one, yeah? So in one of the trades, I'm in minus £1,000.69. And in one of the trades, I'm in £58 profit, okay? So just subtract it from this, yeah? This is the profit and loss for this trade, okay? And in France 40, I've got two trades open as well. One of them is, yeah, it's two positions, okay? Making four in total, four France 40. One of them is in 135 profit, one of them is in 123 loss, okay? So subtract this from that, you get that, okay? That is the total profit and loss for my France 40, okay? So subtract this £12.20 from the total of this, okay? So the total of this trade is this. The total of this trade is this. If you subtract this from this, because obviously the loss is bigger than the plus, yeah? Take this from this, okay? That's exactly what you have here. Yeah? So that's how it works. That's how it works. And the margin basically is how much I have in every trade, how much money I've put into all the trades that I have open, okay? So the 4 positions of France 40 and the 1 position of this currency pair, yeah, cost me £10,000, £10,900, okay? That's what it means. And available balance is basically subtract my margin, yeah, subtract my margin from my current funds and subtract this from my current funds, okay? If it was plus, okay, if I was in profit of £998 right now, my available balance will be subtract my margin from that plus that, okay? That will be my available balance, okay? So if you do a mental math, if you subtract £12,000 from that, you have £11,000, 900 thereabout, yeah? And then subtract the 900 from that, yeah? You have 10,900 and something pounds, okay? So that's just simple. And then this just gives you the percentage of your funds that you have in a trade. In other words, the percentage of that, okay, the percentage of your margin versus your main balance, okay, that's it. So equity used, yeah, so that's this, it just puts this in percentage, okay, relative to your funds. That's what it is. Does that make sense now? Does that make sense, Roy? And then you were asking a question that, for example, if you open trades with 10,009, blah, 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 you were saying, would you ever, is that money go, if that money gone forever? No, it's not gone forever, except you have a loss that is equal to 10,985. Okay, the fact that you open trades with this doesn't mean that money is gone. It's still your money. That's how much you've invested in the trade. Okay, what is gone is whatever is a loss here. That's what's gone. Okay, whatever is a minus here, that's the money you do not have. And if by the end of the trade it comes back to positive, then you haven't lost anything. You only made money. Okay. But if this minus whatever grows to be minus 1,000, minus 2,000, then minus 10,000, then minus 11,000, it could even grow to minus 23,000, and then boom, your money is gone. So for example, say you set a trade and you didn't put no stop loss, and the market starts moving against you, and you don't cut your trade to minimize your loss, and you just leave you hoping that the market will come back to you, and the market just keeps going away, keeps going away, keeps going away. It's possible for you to lose all your money. Yeah, it's possible for your account, for your slate to be wiped completely clean. It happens all the time to people. It happened to me probably like 1 billion times when I was learning to trade. Okay, you just have this stupid hope, and the hope just never materializes. And you just do it again, until you face your facts and you learn. Because it is one of the things that make you a brave trader is to be able to cut your loss and say, you know what, I lost this trade, and I'm just going to accept the loss. People don't know how to accept loss. Now you can trade in the future with only this, which is, no, you can trade with this as long as these trades are open, okay? It's not just, yeah. So as long as these trades, the trades that I'm open, the trades that are open now, as long as they are open, and no, don't even say future, right now, say right now, this is how much I have right now to take trades, should I want to. Because it can change tomorrow or Monday. I can wake up on Monday and this minus 998 could have changed to plus 500. Yeah, if this changed to plus 500 now, yeah, then I would have more money available to trade. My margin that I have in trade will not change except I add more positions, okay, or I close some positions. If I close some positions, my margin will reduce, okay. Whatever money, whatever the position I close is equivalent to will be subtracted from this, because now I've closed the trade, okay. If I close the trade in minus, the minus will be taken out of my main fund, okay, and then the rest will be returned back to my funds. And if I close the trade in a positive or in profit, my margin plus my profit will be added to my funds, okay, and which will reflect my available balance, okay. Whatever is left on here will be subtracted from this, and then whatever I have left will be available for me to trade, okay. So you don't lose any money. The only money you lose is the money you actually lose, okay. So your margin is not lost. Your margin is how much you have used to hold position in the market, okay. So yeah, it's still your money. It's just that it's not available now because it is doing the job for you, okay. You've sent it on an errand to go make money for you, okay. So the money is not lost. It's just doing the job that you've sent it. And once you decide that the job is done and you recall it, the money goes back in there. The only thing you lose is whatever profit or loss, whatever loss you make here. That's what you lose. Yeah. All right then. So I hope everybody understood that, because obviously, yeah, this is how this works. Yeah. So let's have a look at let's have a look around again at some. So what I would do today is, for example, like a German 30. Okay. So I'm gonna let's look at German 30, a chart that we haven't touched before, and let's just analyze it together. Okay, let's do the technicals together. Again, like I said, your fundamentals, your sentiment, or all of these things will depend on how hard you're willing to work. If you decide to be a lazy person and you can't even just pick up your phone or your computer to just look in the internet and see what's happening regarding whatever instrument you want to trade, then that's your cup of tea right there. Okay. If you want to be a profitable trader, you must be willing to put to work. Okay. You can't get out of something more than what you put into it. Okay. So you don't want to go into the market blind. You want to go there with your eyes fully open. Hence the reason why you would do your fundamentals. Some of the fundamentals you'll be aware of anyways, because there will be popular news that is just surrounding a particular instrument. Okay, for example, Brexit. If you're trading anything that Brexit affects, you just, even if you don't go to the news, you hear about Brexit almost every day. I mean, it depends on the people you have around you. Most of you are in uni, who are studying economics, and all of these things play an important part in what you hear on a daily basis. But then you must make another conscious, vested interest, have a vested interest, a conscious effort to find out more information and know exactly what's happening, okay? Because the market moves per second, okay? It's different from the real world. The market moves every second. So you want to know where the market is going if you're going to be trading inside it. So fundamentals and sentimentals, you need to find credible people to listen to, credible news sources to follow. So all of those are variables, okay? The one thing that remains, so should there not be, say there is a fundamental that hasn't changed, okay? There's a fundamental that hasn't changed and it's just there, okay? And we don't know when it's gonna change. Okay? That condition, that situation is just there. Say the sentimental, okay? What other traders are thinking, say they're not even thinking about anything major right now. One thing that remains constant and is constantly building is technicals, okay? People are constantly buying and selling in this market. It never stops. And because of that, the chart keeps printing. The chart keeps printing. The chart keeps printing. And price always moves in a pattern. Price always moves in a pattern. And that is why I said your technicals must be on point. You must be extremely sharp with your technicals. Your eyes must be so sharp that you look at a chart and your eyes can put a line there even if there's no line. Let's say they disable the line functionalities in these platforms. No more lines. Okay. Your eyes must be able to put the lines there and know exactly, okay, price is moving between this point and it's moving in this region, it's moving in this region, and it's here now, so it's going to take off from here and it's going to go here. You must be able to do that. Just looking at the chart, it should take you a few seconds to figure out what's going on. Change it from time frame to time frame. Your eyes should be able to see pattern in pattern because price is always in pattern, okay? And even when sentimentals kick in, even when headlines come out and price moves so strong, it is still filling in a space. Hence why your technicals have to be on point. It's just that some people build their own whole trading life around technicals, and I don't believe in that. Okay, it doesn't work that way. You must know what's going on elsewhere, but your technicals is like the platform that puts everything together. Okay, so and that is why I said when we started technical analysis that we're going to spend time on it. Literally, we're going to do it until the end of the course. Okay. You learn more stuff, but we look at technicals every single day, every single time we meet. So let's look at the German 30. Okay, this is the monthly view. Okay, the monthly view is showing us information from 2000. Okay, from 2002. Yeah, from 2002 all the way to the present time. Okay, all the way to now. Yeah. So looking at this chart, what can your eyes see? Immediately I can see the trend, okay? I can see multiple trends in trends, but at least I want to see, so immediately I can see the trend line, okay? Trend line is definitely going to be somewhere. Did I click on it? There's my trend line there, okay? Boom. Yeah, we can see this straight away, isn't it? You can see the main, you can see that it's an uptrend, okay? It's an uptrend. It's been a bullish market for close to 20 years now. Okay, this market has been bullish for close to 20 years. That is a very long time. That is a very long time. So the German economy has been doing extremely well in the last 20 years. That's remarkable, amazing stuff, okay? And once you find this, you see, I see some of you just do this and just leave it like this. No, you want to know what the bottom of the channel is. I don't care if it's fully formed or not. Just know it. Okay, just know it. It makes you a better trader. Okay, a better trader. So don't just focus because price is bouncing off the top multiple times. You don't worry about, no, as soon as you find the top channel, I want to find the bottom channel. Okay, and I would say the bottom of the channel is here. At least you may say, oh yeah, what about this bottom? Yeah, we'll put a line there, it's fine. But price hasn't stayed there a lot. Okay, you can see that there's the IG just put it there straight away because the system kind of understand what I'm trying to achieve here. Okay, so this is the trend in this market. This is the main resistance up here, the top of the channel. This is the main bottom of the channel. Remember I said when price touches twice, at least price needs to touch, get into a region. Okay, I'm trying to avoid to say line. Okay, if I say line, I want to believe you understand what I mean, but support and resistance is not a line. Okay, it's a price, it's a region. Okay, so I can put like a circle, say like around here or something, around here. You don't want to say, you just don't want to put a point to say no, right at this point. Never works that way. Okay, so but we put a line there just for visual immediacy. Okay, put a line there. So this is the top of the channel. This is the bottom of the channel. This is the uptrend channel. Okay, this is the main channel. And remember, this is the monthly chart. Okay, so every single candle represents a month. Why did I put this middle channel? This has become my practice because I've just seen that price does this a lot. Okay, nobody taught me this. Okay, when I was learning to trade, I learned this by experience. I just know that price always, and I can then tell you that this is my support range. Okay, this is my support range. Yeah, and in the same way, if price spends a lot of time at the top, price can then begin to form maybe like a resistance range somewhere in here. Okay, again, I don't have any reason to put this line here. Okay, normally to put this line here, I'll probably need to like go back into the past and see what has happened. Yeah, you see, I was right. You see, price was going up, pulled back, broke it, came back, and price consolidated around the line. Okay, all these candles don't really matter. Okay, you can see that the money was really like just around the line. Okay, so I can say this my line is valid. Okay, and price hasn't, price hasn't made any journey or any adventure in that area. Okay, in almost 20 years now. Okay, but hey, the line is still valid, so I can leave you there. Okay, but remember, price always forms a pattern. So maybe who knows in the future as price is bouncing out, price goes into this area and then price begins to play in there. But what happened is when price gets into this area, someone is just trying to figure out what's going on, but I figured it out 20 years ago. Or I have used data as old as 20 years old to figure out what's going to happen 25 years after. That is how to be a trader, okay? So yeah, so this is kind of like what we're looking at right now on a monthly basis, okay? So who was asking me about the different times, who was that? Mohammed, okay? So let's look at Mohammed's theory now, okay? This is Mohammed's theory now. Let's explore Mohammed's theory. So this is how things stand, okay? So in the last, say, from 2015, okay? So let's focus on more recent times now, okay? So from 2015, yeah, this middle channel, yeah, the middle channel has started forming from here, but price only touched the bottom once, only touched the top once, so we can't really say this middle channel is established, okay? Because when price touched here, price came all the way down here, did a double, and then went up, okay? But as soon as price got here and pulled back, yeah, not just pulled back, reversed, okay? This is not just a pullback. Yeah, if you just had this one red candle and then price continued to rise, we can say this is a mini pullback, okay? A retrace. Well, for example, here, when price touched this top, yeah, these two red candles are just retraced, okay? Because it didn't just go down, yeah? Price eventually went up and tested it one more time before, yeah, it then, yeah, came back down with one pullback and then all the way down. Again, bear in mind, this is monthly, okay? Within this journey down here, this will be many weeks, okay, many weeks, many days, couple of years, maybe, okay? Right then, so as soon as price touch this level twice, okay, we can then say this resistance is now established, it's now valid, okay? And as soon as price came down, okay, no, actually, this support became valid when this pullback, okay, higher low, no, low, higher low, higher low, okay? Ideally, this higher low should have come down here, but hey, this line stopped price here and sent it all the way up, okay? Sent it all the way up to go complete the second touch for the resistance, okay? So at that moment, we then know that this support, okay, that we were suspecting here, but as soon as this major pullback happens, we're waiting for the second one to make it a valid support, okay? And that happened here, and that was confirmed there. So forget about the fact that price crossed over a little bit. Again, like I said to you, this is a false break, okay? This is not a break of this line because the body of the candle eventually came back to close inside the trend, okay? So this is a false break, okay? So this channel has now been established, okay? And we can see it strengthening over the course of the future. Because remember, I told you, the more times the lines hold, the stronger we can consider the lines to be, and the more reliable we can consider the price to be. So what does that mean? As price is journeying up now, okay, if price takes up this high, okay, which we haven't seen in a long time, okay, the last time we saw this high was, okay, maybe not a long time, January, beginning of last year, okay? So let's put a line at this high. Again, make it a practice. Always identify the previous high. Because what happens when price gets there again, there is a very, very high tendency that price will react the same way it reacted the last time. Okay? Or better still, it's a psychological resistance. Okay? The fact that price is pulled back there twice, 1, 2, okay, already shows that when price gets to this level, price will respect it. Okay, so it's a price point to watch. So if you was a buyer, you must be prepared to take a profit here. I don't care if you're trying to trade this trend all the way up here. Okay, the normal trend is bounce, 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 and then the next should be maybe somewhere around there. Okay, so let's put another line there. Okay, this is what I do. Yeah, I always try to put a line there. I don't want to trust my eyes. Okay, so let's assume that price will be hitting this top sloping resistance line at this level, okay? If I want to be more accurate on around where price is going to be hitting it, what do? I go back in the past and I go find anything that has happened in this area, in this region, okay, to use as a reference. This is how to trade. And you can see I can go far back as 1990, I don't know, 98, maybe like 96, 1st of February 96. That is as far back as this chart is showing us. Okay, this is as far back as this chart is showing us. So price has never been there. Okay, so in some charts, you would see a reference in the past. You go back in the past, say you find something like this around the top here. Okay, so you take that high as a reference, and then you put a line there, and then you go in the future, and then you know that, okay, as soon as price hits that high that is hit before, just like we're looking at here. So this is a high. Let's say between this high and this high, let's say there was 20 years in between. Okay, so looking at the chart, you probably won't see this in a whole window frame. You may need to scroll all the way back to go see it. As soon as you see it, you put a line there. So if we're wondering where price will pull back in this journey 20 years later, we can go back in time, put a line here, come back in recent times and okay, we know that when price gets to this area, we're going to see a psychological concession by people to know that, you know, price needs to turn around here. Except whatever is driving the price is extremely strong, that it can push price to a new all-time high. And even if that's going to happen, price will still kind of like do a little bit of test, you know, maybe test the line once or twice before eventually breaking it, okay? But yeah, so for the last 20 years, yeah, it's safe to say, it's actually fact, the last 20 years, price has never been this high, okay? You can see the German 30 has been on an increasing rally for the last 20 years. Okay, so that means every high is a new high. Okay, this was a previous high. Oh, this is a perfect example. This was a previous high. Price went all the way back down, and then price came back to test this level at 2007. Okay, from about 2000, okay? So this is about 5 years, okay? If I was to change this to daily chart now, you probably wouldn't see all of this, yeah, from this level to, from 2000 to 2005, 2007, you wouldn't see on one window, okay? Because there will be loads of candles. You're gonna have to scroll back, okay? But you can see an example of what I said here. So let's say as price was climbing here, let's say price was around this level, okay? And know it's climbing. I want to know what's gonna happen, where price is gonna. So what I'm gonna do is I'm just gonna put a line, okay, on this high. Yeah, this is the last strong high, okay? So as price is around this level now, I know price is gonna go up, okay? So I've already put this line here to, it's kind of like an alert, okay? And you can see as soon as price got to that level, yeah, price didn't just break it. Okay? Price got to that level and pulled back. See, almost on the same point. Okay, it wasn't even like, oh, it crossed a little bit. No, it pulled back, tested it one more time, and for like 3 or 4 months, remember every candle is monthly, yeah? For like a couple of months, and make it bigger a little bit, yeah? So you can see. Price hit it here, pulled back, here, pulled back strongly for like 2 months, okay? This month and this month, because in this month, price came all the way down here, eventually recovered, okay? And then in the next 3 months, price made a rally to go test it again, yeah? And then for like 3 months, price consolidated around that resistance. And there was nothing good enough to push price above it. And what happened? That previous resistance, okay, the price experienced there was successful in sending price all the way down, okay, to come for another retest, okay. And at this time, when price came for this retest, whatever was propping this rally was strong enough to push price above it, and price closed above that line. You see, price closed above it. So price closing above it is already an indication that the era of this being the price ceiling is now about to be over, okay? And then few candles after, price to journey below it, you see the line was not very strong anymore, and eventually, boom, the break happened, okay? And as soon as the break happened, the once upon a time resistance now became a support, okay? The price was coming all the way down, boom, became a support, and sent price even higher. So you understand the principle of the previous support can be a resistance, the previous resistance can be a support. Okay, so, but in this case now, we cannot find out around when price is gonna hit this line, because price has never been this high before, okay? So we're just gonna have to wait to see what happens, okay? We're just gonna have to wait to see what happens when price gets there. But what I do as well is I look at the distance between this high and this high, okay? I look at the distance between this high and this high to kind of gauge what's gonna happen here, okay? So I can leave this my line here, anticipating price to reach it, okay? But again, bear in mind, this is gonna be a new all-time high if price should get into this area. So what would I expect to happen here? I would expect exactly what happened here. Because at this time, this was an all-time high. The price got there, came down. Okay, tested it one more time, it came down. Yeah, so this is another all-time high. Yeah, I'm expecting price to be the same. I'm just saying, if not, it's gonna come and complete the range. Okay, but at least I'm expecting price to pull back from here. Okay, now how does indicators help in this case? How do indicators help? Again, like I said to you, this is a big time frame. To then trade in this trend, you don't just trade based on the analysis we've done now. Okay? This just helps you to know where price is going in a long time and show you where price is coming from in a long time. So you need to then change to smaller time frames and find trends to trade. Yeah. In other words, in this journey from the bottom to the top, yeah, I can already see the price is forming something like this. Again, your eyes must be trained to see these things, and this comes from analyzing a lot of charts. Just open a lot of charts and analyze them. Yeah, so I can see these already. So these that I've seen now, if I change this to weekly charts, it will make more sense because Then you see, yeah, you see that this is the bottom of the channel, okay? And price is trading to around the top. This was that line that I put and I said, I'm hoping that price will get there, okay? This is that line. This is that all-time high that I'm saying price will respect when price gets there, okay? This is that all-time high. Already we can see this lower one next to it, yeah? I could put a line here as well because price tested it twice, yeah? You can already see price has already gone above it, okay? If you look at this faint gray line, you can see that price is already closed above it. So it means that line is not really reliable anymore. Okay. So, and I'm expecting price to respect this one, okay, which was that. Okay. And should price break it, and I'm expecting price to be hitting the main resistance around this level. Okay. But I've identified the trend in which price is going to climb in that journey is this on a weekly. Yeah. So on a weekly, price is around the top. Yeah. Which coincide with this stop. So this gives me double confirmation that most likely, if price hits this area, okay, or if price should next week, if price should go all the way up, yeah, one candle does it, boom, price is gonna be hitting around this level. Just imagine a candle next to this one, yeah, price is gonna be hitting around that level, which makes us perfectly right. And should price not do it once and fluctuate a little bit, we're thinking when price probably may not touch this level. Yeah, may get to. We're looking at this line being very, very strong resistance. That's what I'm saying. Okay. So because of that, I can't say, oh yeah, price is almost there, so I'm just gonna start selling. No, I'm not gonna do that because look, price still has a bit more space to move higher. Okay, so I'm not gonna commit to a sale except I have a lot of money and I can't be bothered. And I feel, look, even if price come all the way here, I still have enough money to weather the storm. So yeah, if that's you, then you can sell. But I assume that you're going to start with monies that is not a lot. So you want to take advantage of immediate price movement. So because of that, I'm not going to do any sale. I can set an alert to sell if price hits this line. And that's still a couple of weeks to come. Yeah. So I want to know how am I going to get up here. Yeah. So what I'm going to do is I'm going to change to smaller time frames to see what's happening here. Okay, that's how to trade. And you go to 4 hours, and you go to 1 hour. Okay, to be able to trade in the shortest period of time, knowing the long-term movement of price. Okay, now how does technical indicators help? I'm going to show you moving average again. I showed you this last week briefly. I'm going to show you again, and then I'll show you RSI again. Again, I don't want you to start relying on indicators now. Okay, I want you to be thorough with your support and resistance. Understand it. It is a permanent indicator that you produce. Okay, this one the platform produces. I don't decide where my moving average is gonna go. Okay, I just come under indicators there. Yeah, and I just click on moving average. Okay, let me take it off now. Take all the indicators off. Okay, do I have any other one? No. Yeah, no indicator right now. Guess what? I have my support and resistance. That is an indicator that comes from knowledge, and nobody can take that from you. Even if you move from IG to another platform, you will still be able to do the same thing. Okay, these ones are enhanced, and these indicators, most of them are lagging indicators. Lagging indicators means the software is only able to analyze data after it's happened. That's after you've lost your money. Okay, so indicators are good, but most of them are lagging indicators. They only analyze data that has happened in the past. Okay, but you can identify a trend that is forming to happen in the future. Look at what I have done here. By drawing these lines, when I opened this chart, there was no line. So this visual accuracy that you have now because you're looking at my lines wasn't there. It was just green and red candles. Okay, but now that I've put the line now, you can then see this trend like it's already like you've just seen it all your life. No, you only saw it plainly and it's now printed in your memory because I've put a line there. So now we know we're watching this to complete the range. Now we know this is the channel through which price is rising from the bottom to the top. Okay, I could put a line here and put a line here, and you can see that the same thing happened here. Again, I'm spending a lot of time to do this because you will thank me in the future This is the lifeline of trading, I'm telling you. Okay? So this was what happened, yeah, on the way to the top, yeah, in this particular travel, okay? Price traveled in this channel, yeah? And you can see this line, you can see what happened with this line that was put there, yeah? So price didn't go up to complete the top. We respected this line and pulled back, okay? And again, we found that from the bottom of the channel, again, journey to the top of the channel, we've already identified the trend. Okay, price is gonna bounce in between here. And even if price breaks this level, yeah, price is just gonna continue in this, except it breaks to the top side, then it's gonna find another one. And you should be trained to be able to see it, okay? So in other words, what I'm trying to say now is, in the absence of indicators, this will still make you a trader. Indicators only enhances what this does. It doesn't replace it, okay? So yeah, so if I decide to add an indicator now, go onto my indicators and put a moving average. What is a moving average? Okay, a moving average, as the name implies, just shows you, it finds the average price movement. It filters out the noise and shows you where the money is. Okay, as price moves from a level to a higher level, or moves from a higher level to a lower level, it shows you where the real money is. It filters out the noise, the false breaks, the exaggerated hikes, and the exaggerated dips, and it just shows you where the money is. It smooths out. It makes the journey visually more, how do I say it? It gives you better understanding of price movement. Let me say it that way. Okay? And the way it works is the green line that you see here is called the 20-day moving average. Okay? You can see my mouse down here. It's a 20-day moving average. It shows you the movement of price over 20 days. Okay? And then the 50 is the 50-day moving average. And of course, the 100 is the 100-day moving average. So what does this mean? It means that the green line will fluctuate more rapidly than the black line because it shows 20 days. Of course, in 50 days, you will find 20 days twice, okay? And you find 20 days 5 times in the 100-day moving average. So that means that the green line will change direction or oscillate 5 times faster than the red lines, okay? Hence the reason why you see the red lines is a little bit less temperamental, and you can see the green line, you can see, okay? So you can see from the explanation I've given you now, it tells you of how subtle they move. So you can see the most subtle is the red, the more subtle is the black, and the more busy is the gray, okay? So you can see the price movement. You can see the price movement. So what that does is it helps you to know when trend is about to change as well, okay? So you can see on here, okay? You can see in this rally, okay? And this was close to the beginning of this chart anyways. That's why you see that the line was not really formed here, okay? Because there was nothing in the past to analyze. Again, that's why I said it's a lagging indicator. Something has to happen for it to fully work, yeah? So you can see nothing much has happened in the past because this is pretty much the beginning of the chart. So hence you can see the line is broken. Yeah. But you can see as soon as the green line crosses over the black line, yeah, you can see it indicates that trend is changing. And how do we know trend is about to change again? Yeah. Support and resistance always tells you anyways. But using the indicators, you would have to see a crossover. Okay. Yeah. The green crosses over the black and crosses over the red. Boom. Yeah. Trend changes. Okay, so crossovers is what we look at in the moving average lines to see where price is going next. Okay, we try to watch the crossovers. So right now, this is a perfect bullish move because the green line stays at the top, the black line stays in the middle, and the red line stays at the bottom. Okay, so the bullish market is still pretty much valid. Okay, but however, if this line begins to cross over now, yeah, and tries to cross over again, they will know that a trend is about to happen. The crash that I predicted will happen in the stock market, if it does happen, how you will know that a crash is in full swing is you will see the crossovers will happen. Okay, So keep an eye on that. And the RSI, like I said last week as well, it just shows you the overbought and oversold regions. And again, once you put these indicators, it is there on every single time frame. Okay. And if you put like so should you put a mouse on an indicator and click on this eye, it gives you a little bit of explanation of what the indicator does. Okay. You can see on here. But you may not be able to understand some of the terms used. Hence, my explanation without making it more sense. Okay. So yeah, so the relative strength indicator, which is RSI, is here. A lot of traders use this. A lot of big corporations, organizations use this because it's just common sense. If the market has been buying, you want to know where, okay, now it's just been exaggerated. It's just been overbought. Okay, it should be changing direction now. That's what this shows you. Okay, it showed you that around here, yeah, price became overbought. Yeah, yeah, you can see it here. And then this happened, this correction happened. Yeah, so it will always be these two lines. Okay, depending on whatever time frame you put, it's the same. It's going to show you overbought on a weekly level. Yeah, so the last time it was overbought was at this level. Okay, yeah, and then price touched and turn around. And normally, if the sellers continue, it will become green. Yeah, show you it's oversold now. Buyers should come in. Okay, and you can see price is near this level now. So price can either start pulling back down or goes up a little bit more. And once it crosses over, the overbought is going to become red. Okay, and everyone that has this indicator set up on their charts will see it, and they will get ready to sell. Okay, that's what RSI is. And once you put it on your chart, it doesn't matter what time frame you change it to, it's always there, and it shows you oversold and overbought on that time frame. Okay, the same thing moving average. If you change it to daily chart or 1 hour chart, it is still there. It just shows you. You just analyze your information, and it shows you crossovers on an hourly basis. So this will help you to trade on a smaller time frame a lot. Yeah, if you're looking at 4 hours chart, it will show you crossovers like so, like so, like so. Yeah, crossover from falling, crossover. Yeah, and price will stay above the green, and sometimes it will crossover and touch the black. But once it begins to crossover like so, you know it switch around is about to happen. You can see. Yeah, and if this continues, you will see full crossover, and then what you see on the way on the top, it will show on the way. The red will float to the top, black always stays in the middle, green comes to the bottom. That's a bearish market. That's how those two indicators work. On Wednesday, I'll show you 2 more. Okay, I'm not going to show you everything because you won't use everything. Okay, I don't need to show you everything. I'll show you the most popular ones. I'll show you the ones that I use. And then in your own time, you can study more and decide to master some more indicators and use it. And that will be good for you. But I'll show you the most popular ones. I'll show you the MACD. I'll show you momentum. I'll show you pivot points. I'll show you the parabolic. I'll show you the volume. I'll show you the stochastic. I'll show you the Bollinger Band. I'll show you all the oscillators. I'll show you. Okay, and the rest you can. Some of them are just combination of 2 different standalone ones. Okay, like this moving average convergent divergence is just combination of moving average and momentum. Okay, yeah. This that you see down here, this small, this red and green stuff, these are momentum. Okay, it shows you that there was a strong bullish momentum here, there was a strong bearish momentum here. And so you see it. Okay, the bullish momentum you see here is this. Yeah, it just shows you the momentum. It shows you where the speed is. Okay, the buyers are gaining speed, the sellers are gaining speed, and then the moving average, it just simplifies these 3 lines into 2. Okay, blue and red. Okay, and then it combines the 2 together. Okay. Again, I'll show you how this works, and what you can see, it's just an indicator. It still takes cue from whatever is happening here. It's just analyzing and giving you a better field of making decision. That's all it is. Okay. So most of the indicators, some of them just combines 2, some of them combines 3, and some of them are standalone. So most of the ones I will show you are standalones, and I will show you something that is not an indicator. In my own mind, I think is an indicator, but is not considered an indicator. Okay, it's considered a drawing. Okay, so you will see on that drawing, it's called Fibonacci. Okay, extension and retracement. I will show you, and I will show you Elliott wave. You already know channels and all of that, so I will show you Elliott wave, and I will show you Fibonacci. So yeah, some more couple of interesting things to treat, but I'll take it step by step. I don't want to bombard you. Okay, and with all of these things, you don't need to use all of it. just find whichever one you feel enhance your style of trading and incorporate it. If it doesn't, don't force it. Okay, just leave it. Support and resistance is something that is universal, and I think is more reliable than all of these guys. Okay, at least in my experience. So, does anybody have any question for calling a day for today? Could you please repeat the different colors? Yeah, green is 20-day moving average. Black is 50-day moving average. Red is 100-day moving average. Okay, it shows you price movement over 100 days, over 50 days, over 20 days. And it just helps you to know the average of where price is. That's all it is. That's all it is. Can you please repeat what happens when crossover happens? Change of trend, okay? The direction changes, am I right? That's correct, yeah? So when crossover happens, change of trend, okay? The natural order is it should be 20-day, 50-day moving day. Once 20-day begins to crossover 50-day, crossover 100-day, then a trend is about to change. And it shows you the same thing on different time frame. Any time frame you look at, it will show you crossovers in that time frame, okay? So it helps you to trade smaller time frame as well as bigger time frames. Does that make sense, guys? Give me a thumbs up. Let me know you understand what we just spoke about. Let me know you understand what we just spoke about. Again, this will be on our YouTube channel, so you can watch it again and again to understand it. Amazing stuff. So, so guys, whatever you learn, start implementing it straight away and ask questions if you still don't understand. So on Wednesday, we take 2 more indicators. We talk about chart again. I'm always going to be talking about chart. I'm going to take loads of your time with charts because I didn't have anyone to teach me this. I learned this the hard way, and I don't want you guys to repeat the same mistake. Hence, the reason why you're learning is because you don't want to make the same mistakes that some people have made. It shortens your own journey, makes you more productive. That's what I want to see. Okay. So thank you guys for joining today. I'm going to see you guys on Wednesday. I want to see more trades. Okay. I have not seen trades from some people for some reason. So I want to assume that you've been busy, but don't be too busy to not put into practice what you've learned. So please take trades, as many as possible. And even if you're not taking trades, analyze charts. Just open random charts and just analyze it for analyzing's sake. It sharpens your skill, okay? So open different charts, give yourself challenges, analyze a bigger time frame, smaller time frame. Just think about this. You want to know every single possibility of price movement. You want to know where price is going to go. If it decides to go this way, this way is going to go. If it moves this way, this way is going to go. And post those pictures, okay? So let's update our assignment now. I don't just want to see trades. Okay, I want to see trades. If you do trades, it's good. It shows that whatever you analyze, you trust it. Okay, so you put your money where your mouth is. So you put your mouth where your money is, whatever. But I want to see an analysis. I want to see you analyze charts. Put your analysis on the bigger time frame. Put the screenshot on the smaller time frame and say, look, this is what it looks like on the 4 hours. This is what it looks like on a daily. This is what it looks like on the weekly of this particular market. And then move to another market. Okay. Put in that group. It helps others as well, and it helps you. Yeah. So thank you very much, guys, and I shall see you on Wednesday. If you have any questions, give a shout in the group, and someone in the team will try to respond, and I myself will respond. Okay. Yeah, and I'll see you on Wednesday. So see you guys. Thank you, Mohammed. Thank you, Roy, and I'll see you guys. Yeah. Thank you, Angela, my sister. I'm going to see you on Wednesday. Yeah. Have a nice weekend.